Here's something about Medicare almost nobody explains until it's too late. The premium you pay this year isn't based on what you make this year. It's based on your tax return from 2 years ago. Think about what that means for the year you retire. You stop working, your income drops. But Medicare looks back at your tax return from 2 years earlier when you were still working full-time, and it charges you a surcharge based on that old income you no longer make. For some retirees, that's an extra $3,000, $4,000, even $5,000 a year on money that's gone. Now here's the part that actually matters. There is a form that fixes this. It's called SSA 44. Social Security built it specifically for this situation, and most people who qualify never file it because they don't know it exists. Today, exactly how this surcharge works, the real 2026 income numbers, the 8 life events that let you appeal, and, just as important, the common situations that do not qualify, so you don't waste your time filing for nothing. Every number is from Social Security's own pages, linked below. Let's go. The surcharge has an ugly name, Income-Related Monthly Adjustment Amount. Forget the acronym. Here's what it actually is. Most people on Medicare pay a standard Part B premium. In 2026, that standard premium is $202.90 a month. If your income is above a certain line, Social Security adds an extra amount on top for both Part B and your Part D drug coverage. That extra amount is IRMA, and the key mechanism straight from the SSA 44 form itself. To decide your IRMA, Social Security asks the IRS for your income from the tax return you filed for 2 years prior. For 2026 premiums, that's your 2024 return. So the first myth to kill, your Medicare premium reflects your current income. It does not. It reflects your income from 2 years ago. In a stable year, that's fine. In the year your income changes, retirement, a spouse's death, selling a business, that 2-year lag is where people get hurt. Let's put real numbers on it. These are the 2026 brackets based on your 2024 income. I'm going to give you the total monthly Part B premium at each level. Standard premium plus the surcharge. If your 2024 income single filer was $109,000 or less or $218,000 or less filing jointly, you pay just the standard $200-$290, no surcharge. That's most people. Above that, 5 tiers. Single filer between $109,000 and $137,000. Your total Part B jumps to $284.10. Next tier up to $171,000. 405.80 up to 205,000, 527.50 up to just under 500,000, 649.20, and at 500,000 and above, 689.90 a month. The joint filer brackets are exactly double on income, same premiums. And remember, Part D adds its own surcharge on top of all of these. So the spread is real. The standard payer and the top payer are both on the same Medicare. One pays $200, the other pays almost $700 for the identical coverage. That's IRMA A. Now, a feature of this that punishes people who miss it by a little. IRMA is not a gradual slope like income tax. It's a cliff. Go $1 over a bracket line and you don't pay a little more. You pay the entire next tier's surcharge. A single dollar of extra income, $1, can cost you hundreds of dollars a year in higher premiums. And here's why this catches retirees specifically. The things that push retirement income up are often one-time or forced events, a required minimum distribution from a retirement account, a Roth conversion, selling a property, a pension cost of living bump. Any of those can nudge your magi across a line you didn't know was there, and because of the 2-year lag, you won't feel it until 2 years later. Hold that thought about Roth conversions and property sales. It comes back, and it's where a lot of bad advice lives. Let's walk the trap with a real sequence. Say you worked full-time through 2024. A good income, say $160,000. You retire in early 2026. Your actual 2026 income drops to maybe $60,000, Social Security, and some savings. But when Medicare sets your 2026 premium, it doesn't see that $60,000. It reaches back to your 2024 return, the $160,000, and puts you in an IRMA tier. So in your first retirement year, on a $60,000 income, you're paying a Medicare surcharge calculated on a $160,000 income you will never earn again. That is not a mistake in the system. That's how the system is designed to work. The 2-year lag assumes your income is steady. When it isn't, and retirement is the biggest isn't of your life, the lag works against you, unless you tell Social Security. Which brings us to the form. Social Security has a form for exactly this. It's called SSA 44, Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. And its whole purpose is to say, don't use my 2-year-old income, use my real current lower income instead. Straight from the form's instructions. If you had a major life-changing event and your income has gone down, you may use this form to request a reduction in your IRMAA. The logic is simple. You tell them the life event, you give them your actual lower income for the more recent year, you attach proof, and if it qualifies, they recalculate and drop your surcharge, potentially to 0. One important note the form makes explicitly: if your income was low enough that you don't owe an IRMAA at all, don't file this form. It's only for people who got hit with the surcharge and had a qualifying drop. So what counts as a life-changing event? The form lists exactly 8, not things like, 8 specific ones. Here they are, straight off the form. 1. Marriage. 2. Divorce or annulment. 3. Death of your spouse. 4. Work stoppage. 5. Work reduction. 6. Loss of income-producing property. 7. Loss of pension income. 8. An employer settlement payment. For most new retirees, the one that matters is number 4, work stoppage. You stopped working. That's the event. Retirement itself is your qualifying event, and the form's own instructions confirm it. They'll even accept your signed statement under penalty of perjury that you stopped working or took a job with reduced pay. And the timing rule, from the instructions, the life-changing event date must be in the same year or earlier than the tax year you're asking them to use. So if you retired in 2025 or 2026 and want them to use your lower 2026 income, the event date lines up. The form walks you through estimating that current year income. Now, the part almost every video skips, and it's the part that protects you. The list of 8 is closed. If your income spike doesn't trace back to one of those 8 events, SSA 44 will not help you, and filing it is a waste of your time. Here's the trap inside the trap. Remember those things that push retiree income up? A Roth conversion, selling stock or property for a big gain? Those are exactly the things people assume they can appeal. But look at the list again. I did a Roth conversion is not on it. I sold my stocks and had a big capital gain is not on it. A voluntary financial move that raised your income is not a life-changing event under this form. Be careful with one that sounds similar. The form does include loss of income-producing property, but read what the form actually means. Property loss through disaster, fraud, or theft, a loss outside your control. Not selling property on purpose. The form spells it out. It's a loss not at your direction, not due to the sale or transfer of the property. So the honest rule, SSA 44 fixes income drops from those 8 life events. It does not undo a tax bill from a Roth conversion or a sale you chose to make. If a video told you just appeal your IRMAA without that caveat, they set you up to file a form that gets denied. I'd rather you know before you spend the postage. If you do have one of the 8 events, here's how you file. 3 ways, all from Social Security's own page. Online. Sign into your account at ssa.gov and submit the SSA 44 there. By mail or fax, download the SSA 44 PDF, fill it out, attach your evidence, and send it to your local office. Or by phone. Call Social Security at 1-800-772-1213 and tell them you want to lower your IRMAA due to a life-changing event. Whichever way, you'll need 2 things: proof of the event, a letter from your employer about retirement, a death certificate, a divorce decree, depending on which event, and proof of your lower income, which can be your tax return or a signed estimate you'll later confirm. The form tells you exactly which document each event requires. One more for amended returns. If Social Security used the wrong year because you amended a tax return, that's a separate phone call, same number, not this form. 4 things to carry out of here. 1. Your Medicare premium is based on your income from 2 years ago, not today. In the year your income drops, that lag works against you. 2 2026 surcharges run from the standard $202.90 up to nearly $690 a month for Part B alone, and it's a cliff, $1 over a line costs you the whole tier. 3. If a life event dropped your income, Form SSA 44 can reset your premium to your real income. The magic word for most retirees is work stoppage. Retirement counts 4, but the list is only 8 events. A Roth conversion or a sale you chose is not one of them. Know the difference before you file, not after you're denied. Every number came from Social Security's own pages and the SSA 44 form itself, all linked below. Check them yourself. That's the whole point of this channel.